I'm Russ Mould, AJ Bell's Investment Director. And with me here today is Richard Penny, Manager of the Legal & General UK Alfa Trust and UK Special Situations.
That's right.
We're going to talk through what a fund is, how they work, what they can potentially do for your portfolio, and what you should think about if you're considering choosing one. So Richard, you've got two funds. They cover, as far as I can tell, quite a wide spectrum of the UK market cap, but you're known as a bit of a specialist with Alfa, at least in the small cap area. So is that fair? And also, if an investor is thinking about getting exposure to small caps particularly, is a fund one potentially sensible way of doing it?
Yeah, I mean, I have identified small companies over the years as areas where you can outperform, and that's backed up by the facts. So smaller companies, the bottom 10% of the market, are beating the market by 3.5%.
And is that because they're growing faster, they're less well covered, they're less well understood, or why?
It's a bit of both. The performance to some extent comes from the price. If you find companies that grow well, and I think there probably are more growth businesses, you know, it's easier to turn 5 million of profit into 50 than to turn 5 billion into 50. Yeah. There's more growth companies at the bottom end, but actually when there are, that they're a lot less well appreciated. So you get better growth, possibly at a bit more attractive price. But the negative about them is there are times when they can underperform for 1 or 2.
Well, I guess they're quite risky investments. We'll probably come
back
to that.
So you know, the way that you deal with that is you would make an investment and own the fund for a longer period of time. You're looking for 3 to 10 years possibly.
So tell the investors better understand. I mean, you've talked about what you look for. You're looking for smaller companies, you're looking for value, looking for growth. Can you explain to people what you actually do every day? And that's not meant to be a facetious question. How you actually spend your time, because they're entrusting potentially their capital to you. So what are you actually doing to, you know, provide some value?
Perhaps the biggest factor that individuals wouldn't necessarily be able to access would be we meet with the managements of companies. So 2 up to 4 times a day we would meet the chief exec and the finance director of a business. And they will go through their strategy and go over previous results, maybe where they're trying to get to over 3 to 5 years. And it's not just about taking everything that they say in isolation. We'll speak to analysts, we'll maybe cross-check what one company says against other companies in the industry. And then qualitatively that we may have an impression of the business. There is then a job to work out what forecasts, what levels of profitability might be relevant in the future. And then as a fund manager rather than an analyst, you have to work out whether an investment at a given price is going to improve the potential returns on the fund. So we're looking for the right kind of business at the right price that would improve a portfolio. And in the end game is performance. You have a benchmark for UK Alfa and Special Situations. So what are those benchmarks? Well, the benchmark is the FT All Share Index, which is a broad-based measure of, say, something equivalent to the UK stock market. People may be aware of the FTSE 100, which is the 100 biggest companies. This one is a slightly more broader. And you mentioned, you know, quite long. You know, to potentially get the best value, quite long holding period would probably be ideal. But aren't these benchmarks and your performance compared to them quarterly? So how do you manage to sort of measure the pressure between the short term and the medium to long term? Because I guess you're getting, you know, potentially grief from somebody if you're underperforming even in the short term. Yeah, well, I have my own money invested in the own fund, so any pain that's there, I feel it just, and more so than other people. But you know, we're always open to criticism, but you know, the long-term track record speaks for itself. And I think, you know, we're pretty upfront about the fact that our fund has outperformed 6 years out of 10, and it's roughly 5% per annum better than the index. But for the 4 years out of 10, you know, it would be quite a way away from the index. The good years are better than the bad years, so more good years than bad years, bigger outperformance in the good years than the worst ones. So would you say that in general, without getting too specific about your funds perhaps, that certainly the more smaller cap you go, probably the more risk tolerant you need to be, and you're probably looking more for capital gain than income, say. Would that be fair? Yeah, I think that's correct. I mean, I specifically look for capital gains. I have a bias towards technology stocks, companies that would do well over longer periods of time. And I'd like them to reinvest any cash they make in the business because I think they make good returns. Other people may pay you an income quarterly or every 6 months. That's a different kind of fund. Yeah, and you've talked about risk quite a lot. I mean, you've obviously mentioned the fact that you had some years when you underperformed, but I guess for retail investors, for private individuals, relative performance might not be such a big deal. It's absolute return or absolute loss. And I guess the upside is potentially positive return, but the risk
again, is actual loss. Is that fair to say, rather than just relative underperformance?
With any equity fund investing in shares of businesses, you know, the economic cycle does turn down from time to time. That can lead to a lack of confidence, and you know, all equity funds may well suffer losses at that period of time. So that is something that people have to look at when they get involved with the fund and be prepared for at the onset of the investment.
Perfect, Richard. That was very helpful. Thank you very much, and thank you for watching, and we look forward to seeing you another time.
Thank you.